Melly everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. Somebody said I had a terrible tick and was telling me to be a stock picker and a technical analyst because apparently no one follows me for ticks on macroeconomics. And then this person ended up continuing to say somebody else said something else, and like that's why I'm wrong. I don't know what that was all about. So I said okay, and then I reposted this comment because I put myself out there, and a lot of people don't understand that when they put themselves out there, they also are putting their comments out publicly for others to judge as well. So I. Because of this, I decided to talk a little bit more about macroeconomics. And in order to do that, first of all, I'm just going to basically show you a clip here, and I'm going to react in terms of what Tom Lee has said on CNBC recently.
I don't even know if you need an introduction at this point. People tune in to hear. Sometimes it's almost like a salve. And I think you're going to give us a little bit of that today for our wounds from yesterday, but not entirely, because you think the S&P is probably going to be flat for August overall.
Yes, that's right.
And that's unlike some of your recent calls about the S&P with friendlier inflation data. You've made some calls about some big near-term moves. That's not what you're saying today, unless you're talking about small caps.
Yes, that's right. I think part of what we saw yesterday was, the rotation that's painful away from large caps. And I think Tesla earnings and Google sort of accelerated some of that.
I do think that a lot of it is really, truly is rotation, because the S&P 500 has just been going up in a straight line. And at some point, it just needed to correct. And if you're looking at the Ichimoku cloud, you can see that in general, you really shouldn't be too far away from the blue line. And if you're too far away from the blue line, which is the monthly Tenkan or conversion line, just like you did over here, sometimes like over here, you have a big giant bull market that's a little bit way too far away from the blue line for a very long time. You end up getting punished throughout the entire 2022. And the cycle before that, whenever it gets a little bit too far from the blue line, you do tend to have a little bit of deceleration, and it just kind of goes sideways here. Allow the blue line to kind of catch up here a little bit. The previous bull cycle, it really just kind of stick really close to the blue line. It's not really like a normal thing for it to be that deviated from the blue line. So it's very much a possibility where price just goes sideways here for another month or two for August and September and wait for the blue line to kind of catch up. I can totally see that happening, and that would actually not be a bad thing. Like I think a lot of people got really bearish because July was just way too far extended, and a lot of people think it was just going to be like that continuing. But it like July basically did nothing, and a lot of people are already getting scared from it. So kind of interesting perspective if you think about it. I'm going to keep letting it play here.
And I think there's been some uncertainty about the Fed's commitment to cutting, even though we expect inflation to fall like a rock. But when the Fed starts cutting, that's good for small caps. And there has been, I think, overseas, some unwind of that Japan carry trade that's hurt the NASDAQ. But to me, this is why the S&P had a great first 6 months. Maybe it needs to consolidate those gains. But now Russell 2000 has an 11 median PE, earnings growth 800 basis points faster. And
I do want to say it was showing you the yields over here. A lot of people put a lot of what the Fed is going to do, what Jerome Powell is going to do. I think it's a controversial statement that I make, is that I actually don't think the Fed does anything. Even the Fed themselves say that they don't do anything because they say they're data dependent, and they're going to be dependent on, a lot of people are really worried that they're dependent on like lagging data. And a lot of people are worried that the effects of the Fed is also going to be lagging. So they're depending on the lagging data, and their effects are lagging. But to be completely honest, I really do think that you have these real rates here in the market. The market's already adjusting the rates. You can chart these rates. If you're looking at the 2-year yield, you can see that on the monthly, it really has broken underneath the Tenkan here again, and the Tenkan's pointing down. It looks like it wants to roll over. If you're doing the Bollinger Band here, you can see that you're really losing the 20-month moving average over here. And it looks like the trend's rolling over. The Bollinger Band is squeezing. And it's really telling you like a bigger move is going to come. And with this direction change, it's probably going to go down, right? Just like how it did over here, I'm going to do a little bit of a regular rather than logarithmic scale here. Just like down here, you have a Bollinger Band squeeze. Whenever rate just kind of went sideways and it was going down, down, down. And you have a little bit of a trend change over here. Whenever you go up, And you basically have a trend change that's basically telling you that, hey, there's going to be a very, very bullish trend here for the yields, right? And also like this over here, really this look like it's kind of rolling over, kind of like how it did over here. I don't know how fast it's going to roll over, but I just think that it's going to roll over, and I think the Fed's going to cut. It's a lot of people are going to get scared when the Fed cuts, but I also have a lot of evidence to show you that Fed cut doesn't always necessarily lead to a recession. I think that one like A doesn't necessarily equal to B. A lot of people jump into conclusions, but I do think that rates are most likely going to end up plummeting. I just don't know how fast, based on just looking at the technical analysis, because these are real market conditions. These are basically based on bonds demand, and the Fed is going to pay attention to that, whether or not they admit to it or not.
PE, earnings growth 800 basis points faster, and it just posted 11 days where 10 out of 11 days had a 1% move. The 9 times it did that since 1979, when you weren't in a bear market, we were up 100%, 1 month, 3 months, 6 months, 12 months later. 12-month average gained 40%.
You're very popular, and I would warn you this is not good that you're saying this. You think this rotation has been driven by expectations of a Trump White House? Is there another way you can say that? Can you come up with something else so you don't have to delve into the political side? You think Trump's going to win the White House, or you think the market at this point thinks he's going to win the White House?
Yes, it's the second. Okay. Betting markets are putting a 65% probability of a Trump White House. The biggest beneficiary, which is deregulation, M&A, regional banks doing better, that's small cap stocks.
Okay, so that's the linkage that you're seeing then. So you really think we've seen a Trump trade, and even after, the betting markets have moved somewhat. He's come down. Vice President Kamala Harris has moved up a little in the betting market since the weekend when the news came out. You still think that that's at play from here on, not just to explain the rotation that we've already seen? You think it's going to continue?
That's right. So I think it's from this point forward, there's a lot of opportunity in small caps.
It's important to understand that the small cap has really, truly broken out. We still have 3 trading days for July, and we can still end up closing underneath the upper Bollinger Band here. But this is a very impulsive candle. I can show you how small caps generally has about a few cycles that you can identify just eyeballing it. You have a bull cycle over here, you have bull cycle over here, and you have bull cycle over here, and right now we might be starting another bull cycle over here. You generally at like the beginning to mid area of the bull market, you have this big giant breakout candle, which I think we have right here. Very similar to here in November 2020, very similar to over here around November 16, and also very similar to this breakout candle here around January 13. Once you have these candles, generally the bull market can go on for anywhere from 12 to 24 months, maybe even a little bit longer. You had a breakout candle, it kept on going for 2 years. You have a breakout candle, it kept on going for about like a year or so. And right now we also had a breakout candle here. So I do think that there's a lot more runway, and this also is happening on high volume. So it's pretty promising.
It is there's a lot of overlap. When the Fed cuts, that's lowering cost of money. That's good for small caps and the regional banks. It probably boosts CEO confidence, which is M&A, and that benefits small caps. So there's a lot of overlap between a Fed cut imminent and a Trump White House, and that's why.
And a lot of people also worried that the Fed cutting means that there's going to be a recession, when this really not necessarily the case. There's really actually no correlation between the two. I don't understand why people keep on bringing that up as a point where the Fed cut basically just simply equals to, the market is going to plummet. There's actually no correlation to that at all. If you just simply look at the 2-year yield in terms of what it has been doing over the years, there are periods of time. I'm going to get rid of bull market support band here. There are periods of time where you simply have the S&P 500 going up while you have the 2-year yield going down, right? And I can show you a few examples here. Actually, I think the SPX might be a little bit better. There are a few examples here where you basically have rate going down and you have the market going up rate going down, market going up, rate going down, market going up, and rate going down, market going up. I think a lot of people are just basically assuming, oh, the Fed's going to cut rates going to go down, and you're going to end up having a big recession. I think a lot of people have like recency bias in terms of like what happened about in the dot-com bubble and also what happened here in the great financial crisis, is because things are crashing and the rate cut was really trying to save that, rather than rate cut itself causing any sort of like, issue here. Or rather than like every single time when the rate cut happens, the Fed only cuts when things are really bad. That's not necessarily the case, right? I love Tom Lee. I think it's important to understand his perspective too. And on top of all this stuff, like even if you don't pay attention to any of this stuff here, all you really should pay attention really is to liquidity, right? You had quantitative tightening that happened over here in early 2022, but you no longer have quantitative tightening anymore. Quantitative tightening has ended, and the quantitative tightening has bottomed around October 2023, which also was a very vicious, down cycle for August, September, and October. The U.S. money supply has bottomed in October 2023. Since then, over the last 8 or 9 months or so, it's just been steadily going up. You have quantitative easing that's happening now, but nobody's really talking about it. Everybody keeps talking about rates, but the global liquidity is rising. So it's important to take that into context too.
I think the interplay is positive for small caps.
Interesting. So
I still don't understand. You don't think the large caps are done. You just think it's a slowdown for the S&P 500 on a broader level?
Yes, that's right. I think the Mag 7 was very attractive at the start of this year because growth was scarce and they've had great visibility. And they're not expensive. 27 times earnings isn't demanding. But now that there's a visible catalyst for small caps, I think investors are taking some profits up. NASDAQ was up 20% and putting it into small caps.
We were talking earlier, though, just about the Mag 7 in particular and the spending on the cloud. If Alphabet's results are indicative of what we might hear from Microsoft and Amazon next week when it comes to the cloud, where they are spending a lot more than they're able to bring in at this point, is that a problem? Is that because it feels like there's a little bit of a sentiment shift, too?
I think there is a little bit of a disconnect in terms of logic. Usually earnings can happen where the beginning of the earnings season can go one way and then towards the end of the earnings season it can swing completely the other way. What I would like to say was that I mentioned this on just a couple of weeks ago when Google was like all the way up here in the 180s. I thought that Google was one of the most overextended Mag 7 stocks there was. And I would not get into Google. Google's earning actually wasn't bad. Google's earning actually had, like a great, like very, very good balance sheets. Their earnings actually look really good. I mean, they just announced they're going to spend like $5 billion on Waymo, which is not, anyway. But it was just way too far overextended, and it had to cool down either through time or through price to get closer to the blue line down here on the monthly chart. I'll show you what I meant by that. Microsoft, it already had this correction through time. It got really close to the blue line. I think Microsoft actually, the reaction of Microsoft earnings actually going to be pretty good, just simply based on the technically, like it's not way too far overextended. Apple, not too far overextended. It does have a little bit of like a nasty kind of shooting star look to it, but it's not way too far overextended. Is Amazon overextended? It was over here, right? But what happened? Well, price went sideways for a few months because you had to wait for the Tenkan to kind of catch up here. Could it continue to go sideways here a little bit, or maybe even go down a little bit closer to the Tenkan before going up? Possible, but I think right now Amazon's not nearly as far overextended as we were over here back in like February or March. That's why price hasn't done anything. Meta is probably the best risk-reward ratio out of the Mag 7, to be completely honest with you. I think it's already done this correction through time, and it got pretty close to the blue line over here, to the Tenkan over here. So I think it might potentially get closer, or you can just keep going sideways. And if it's going to run, I think Meta is probably going to be the one that's going to run up, one of the fastest. Nvidia, unfortunately, I do think that it has been a little bit overextended, and it's probably going to end up correcting through time, and earnings probably going to still be really good, but people are probably still going to end up you're going to have a lot of volatility for Nvidia. So we'll see what happens with Nvidia moving forward. But I do want to finish up the video here.
Yeah.
Even if it's a brief one and early on.
I agree. I think perception is really important for equity valuations, but the money spent by these companies on AI has a high expected return because they have moats that are getting stronger, and there aren't companies like this anywhere else in the world, so they're very scarce. So I don't think it's wasted capital, but if investors want free cash flow or if they see 11 PE stocks and small caps, that's what's becoming incrementally attractive.
So a flat S&P, but a Russell or a small cap gain of 15% in the month.
Yes,
Possibly. Yeah.
that's right. I think for the month of August, small caps can do something more than 15% even because they've underperformed so dramatically. And the type of move we've seen just in the last 2 weeks is something that only happens at the start of a pretty significant advance for small caps.
I'm not against the idea, although I just simply think that the probability of the IWM or small caps Russell 2000 making that much of a move within the month of August the probability of it is really low. I would say that. And I'm very bullish, and I respect Tommy very much. It's just a little bit of a difference in opinion in terms of technicals. Whenever you have price just kind of push way outside of a Bollinger Band like this, unless if the next 3 trading days, by the end of July, we end up getting closed back down to like sorry, not the ones, but like the 210 range, and then you're talking about 15% from that. I can see that, but to have price currently like 224 and to have 15% on top of that would be very, very difficult to do because you just simply can't just stretch the Bollinger Band fast enough for that to happen. Generally, after a breakout candle like this, you have a little bit of a muted response. Like over here, you have a little bit of muted response. Over here in this next candle is not like big giant green candle, right? It's still pretty good, but you have a little bit of muted response. And it also just like this breakout candle over here, a little bit of muted response the next month. During this gap up over here, this breakout candle over here, you have a little bit of a muted response over there, right? So I don't really completely anticipate you're going to have like a big giant green candle here for the Russell. But I do think that most likely you are going to have some bullish continuation. I would be very pleasantly surprised if that comes true in terms of what Tom Lee is saying, but that just seems a little bit improbable.
Do you think that the earnings that we see for the big caps will they continue to confirm your case that maybe could anyone blow their results out of the water and change this for big caps and say, wow, we're wrong, things are still okay, so that it doesn't? Because yesterday was 600, whatever it was, 600 plus points.
Things are still okay. I just kind of gave me my reasoning. And everybody had a lot of recency bias when earnings come. They see one company going down, they worry. Pretty much like most of the time, majority of the time, the beginning and the end of the earnings throughout these Mac 7, they change. The sentiment shifts pretty significantly. Now, I'm not saying that we're not going to keep going having sideways or downtrend for S&P 500 with these Mac 7 stocks, but I just don't know if I would just say, oh, yesterday this happened, so that's going to set the tone for the whole week next week or the week after. I just don't know about that.
It had a lot to do with earnings. Not completely. It seemed like it was ready to happen anyway. But do you think there would be any surprises that are better than people thought in that group?
I think so. I mean, at the end of the day, I don't think these companies are not capable of positive surprise. A lot of good news was baked in. The line in the sand ultimately will be NVIDIA.
They are, so translation, they are capable of positive surprise. Thank you, Tom Lee.
NVIDIA, when they report, which is really the last one to report, I think over the next 10 years, the outlook is still really good for all these companies. So I don't think investors should lose faith, but profit taking kind of makes sense.
That's okay, great. I think we can continue to have you back on because you've been so good on the markets that even that other stuff.
Tom Lee is a genius in a bull market, and he is a genius most of the time because most of the time it's a bull market. About 7 or 8 years out of 10 years are bull markets. And he's going to continue to be more right than he is wrong. He is an excellent analyst as well. Sometimes he does stay bullish on the market. for longer than he should, but I can't really fault him for it because you're going to go with what is the most likely scenario here, which is, increasing assets prices through time because they just wouldn't stop printing money. They just wouldn't stop printing money. And if you have to talk about whether or not they keep on printing money or not, they are keep on printing money. There's objectively evidence for that. So anyway, thank you so much for listening to this. Have a good one. Bye.